Let me start with something important. If you looked at gold and silver today and felt confused, you are not behind. You are actually reacting exactly how most humans do when market speaks in riddles. Today was not about a single headline. It was not about one piece of news. It was about positioning, expectations and emotion. Gold today moved with hesitation, not panic, not euphoria. It showed small pushes and pullbacks, the kind that frustrate short-term thinkers. Silver, on the other hand, reacted more sharply, faster moves, bigger emotional swings, and immediately retail traders split into two camps. One group said, gold is weak, something is wrong. The other said, silver is waking up, the move is starting. Both reactions missed the real story. What actually happened today was repricing of confidence, not value. Gold didn't move because the world suddenly became safer or more dangerous. Silver didn't move because demand magically changed overnight. They moved because expectations shifted slightly and leveraged emotions amplified it. Most people misunderstood one key thing today. They treated today's price movement as a conclusion. It wasn't. It was a sentence in the middle of the paragraph, not the end of the chapter. And markets punish people who try to finish their story too early. Pause here. Because once you see that today starts to make sense, dollar interest rates and the hidden pressure on metals. To understand today, you have to stop staring at gold and start listening to the dollar and the interest rate, not interest rate expectations. Today, the US dollar showed firmness, not dominance. It wasn't roaring, but it was collapsing that matters. A stable or slightly firm dollar creates invisibly pressure on gold, not enough to crash it, enough to cap excitement. Think of it like gravity. You didn't notice it until you had to jump. Bond yields today send a similar message. Not panic, not relief, just uncertainty. When yields hesitate, gold doesn't immediately celebrate. It waits. Because gold is not reacting to today's numbers. It's reacting to what comes next. Here's the key insight most people miss. Gold and silver often moves before the news becomes obvious. But the times headlines scream, rates are falling or inflation is rising. The smart money has already adjusted exposure. Today's action was market saving, but not convinced yet. That's why moves left incomplete. That's why breakouts failed to excite. That's why silver overreacted while gold stayed composed. This is not weakness, this is evaluation mode. Smart money versus panic money. What big players are doing. Now let's talk about behavior. Because markets are not charts, they are crowds. Smart money today did not chase price. It didn't react emotionally. It didn't care about intraday noise. Institutions think in risk buckets, not candles. They ask questions like, is uncertainty increasing? Is protecting become more valuable? Are expectations missed price? Retail traders ask different questions. Why is it going down? Why didn't it exploit? Should I exit now? Today, panic money showed its hand. Fast entries, fast exit, or reaction to small moves in silver. Frustrations with gold patience, and the frustration is not accidental. Markets are designed to transfer assets from impatient hands to patient ones. History shows this pattern again and again, not with drama, with boredom. Smart money loves boring phases because boredom creates mistakes. Today was not distribution, it was not a climax, it was absorption. Quiet, controlled, psychologically exhausting. That's how strong hands operate. Gold versus silver. Why they behave like brothers, but not twins. Gold and silver share a family name, but they have very different personalities. Gold is protection, it moves with dignity, It absorbs fear slowly. Silver is emotion mixed with industry. It feels everything. It reacts fast and regret later. Today showed that perfectly gold stayed calm because its role is not excitement. The role is credibility. Silver moved harder because it sits at the intersection of hope, growth. When expectations shift even slightly, silver even responds. That doesn't make silver more worse. It makes it different. The mistake people made today was comparing silver energy to gold calm and assuming one was right and the other was wrong. They weren't disagreeing. They were speaking different emotional languages. Silver today was retail emotional, speaking loudly. Gold today was institutional, patience staying quietly. Both were telling the truth. The biggest mistakes people are making right now. This is the most important section because most losses don't come from wrong ideas. They come from wrong behavior. Mistake number one, overtrading uncertainty. When markets are undecided, activity increases. Not because opportunity increases, because anxiety does. Mistake number two, watching price every minute. Price is the loudest layer in the market. It shouts emotion, not truth. Mistake number three, confusing noise with direction. A few green candles do not mean a trend. A red day does not mean failure. Short term thinking destroys long term. Short term destroys long term outcomes, not by being wrong, but by being impatient. Today punished impatient, not intelligence. Calm is not passive, calm is strategic. What this phase means going forward without predictions. So, where are we? Not in euphoria, not in collapse. We are in a phase of evaluation and positioning, a phase where markets last conviction, where prices move sideways more than forward, where emotional traders feel lost. This phase rewards patience, not action. What not to do now? Do not force conclusion. Do not chase confirmation. Do not confuse movement with meaning. Gold and silver are not here to entertain you. They are here to preserve and reflect confidence over time. Long term, they remain mirrors of trust in systems. Short terms, they are mirrors of human emotion. Today showed us something powerful. The market is not screaming, it is whispering. And people who learn to listen instead of react are the ones who stay standing where clarity finally arrives. If you take one thing from today's video, let it be this. Markets are not solved by speed. They are understood by patience. Think clearly, stay calm, let noise pass. Clarity always arrives quickly, and when it does, only the patients are still listening. Subscribe if you find today's video valuable. We'll meet you in another video. Take care. Goodbye.